So joining us now for more is Matt Carmen. He's founder and CEO of Balsam Brands, one of the leading artificial Christmas tree producers in the world. And Matt, it's so great to have you here. We were talking in the break how the artificial Christmas tree in some ways has become an iconic product to talk about tariffs, to measure the impact of tariffs, especially because of the holiday tie-in. Tell us a little bit about what tariffs you paid historically, because I think many people were surprised, to be honest, myself included, when President Trump was in office the first time, that we've been paying tariffs on products since the 1930s, and now we just have additional layers of tariffs. So where were you before, say, April 2nd? And then where did it sit? And where are you now when it comes to what you're paying for your tariff bill?
Yeah, so tariffs last year for us as a business were $1 million total across all our product categories.
Okay.
But that was 0% on Christmas trees. So back in the first Trump administration, pre-lit Christmas trees, which have never been made in the United States, were put on the Section 301 tariffs, but they ended up getting moved to the 4B list, which has a 0% tariff rate. So $1 million on all these other products that we carried, 0 on Christmas trees. If we had stuck at that 145% this year, we would have paid about $115 million of tariffs on what we imported this year, and I would not be sitting here today because there's no way we could have done that.
You mean like you couldn't have operated your business?
We couldn't have operated. With those rates of tariffs, we wouldn't have been able to operate. I mean, that's many times our profit.
Wow.
So thankfully, the rates did come down. When I was last on, we talked about a pause on China. And that was when the tariffs went down to the 30% and have stayed there so far. We'll see what gets announced later this week.
And so what did you do from a supply chain perspective? Did you immediately try to import before those 145% tariffs went on, even just for that short period of time that they were?
I mean, I think this is something we've been thinking about since the first Trump administration. I mean, we lived through that. We started diversifying our supply chain back then, and we followed the election very closely. And literally the day after the election, we started shipping as many products over for this Christmas. So in November of 24,
Wow.
we were shipping for this Christmas to get products in before a potential day one tariff on Inauguration Day.
Wow.
On Inauguration Day, there wasn't a day one tariff. However, Liberation Day was created April 2nd, and so we worked to produce and ship as many Christmas trees as we could in before April 2nd. And then there was the pause in the other parts of the world. We've diversified our supply chain, so we do produce trees in other countries besides China. So we brought as many trees as we could in at the 10% rates. And that's really helped us mitigate the cost of these tariffs for Christmas 2025, is how much we brought in before the full rates of 20%, 30% hit.
And so what is your average tariff rate now if you've diversified your production and you're doing it in a number of countries?
I mean, we are paying close to 30% because
are.
there's 30% from China, 20% from the other countries where we import. But we brought so many goods in before those rates started at 0 and 10%. So I don't know what the total number
Sure.
is across everything for this year. And honestly, it keeps changing.
Yeah.
And we, maybe it was 100% extra as of a couple weeks ago that could have hit some of our tail. The shipments coming at the end of the season. And so we'll see where it lands. But we expect to pay about $15 million this year in tariffs versus $1 million last year. So still a very significant cost for
Sure.
a small business.
And you also had to pay the cost of storage.
We've had to pay the cost
When
of
you brought them in
storage.
almost a year early, where'd you put them?
Exactly. We pay for the cost of storage with warehouse partners. Some of that's in our facilities, but that's a real cost. We've had to finance those trees for longer because once they ship from Asia, then we are financing them, so we've paid more interest to our bank. So there's been other costs that have occurred as well.
Yeah, I don't think we talk about sort of the knock-on costs as much as we do the tariffs themselves. And so then it comes to the selling price for consumers. I mean, your trees are nice trees. They're not inexpensive, but maybe you're not buying an artificial tree every year. So maybe, as a customer, you're a little less price sensitive. How much have you raised prices, and has the consumer taken it?
Well, I hope that that's the case. I hope that everyone keeps buying. We've raised prices. We've tried really hard to keep the prices down like all retailers have, and so we waited as long as we could. But we've raised prices on average a little more than 10%. And that's what we've had to do to stay in business this year. Most of what we absorbed, we did through bringing those goods in earlier at lower tariffs. We cut costs. We sadly let some of our team go. There's other things that we've done to mitigate that cost and try and absorb it. So far, it's very interesting, actually, because we sell all over the world. And all of our businesses around the world, Europe, Canada, Australia, they are all up double digits this year. We introduced our new line of more sustainable trees that are made with recycled plastic or plant-based plastic, and they've been very well received. The U.S., however, we're down a little bit from last year, and I think that's just kind of this drag from consumers not being sure if they want to open their wallets and spend.